You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. Time once more for the Crypto Rundown, the program here on the Options Insider Radio Network, where we delve further afield beyond our traditional stomping grounds. You know, we love our Apple, our Tesla, and our VIX and our SPY options, all the usual stuff. But on the Crypto Rundown, we get to go further afield, exploring the world of crypto derivatives, seeing what's going on out there from a volume, a volatility, a skew, and open interest, unusual activity, and all sorts of fun perspectives. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, of course, if you like what you hear, on the on-demand side, we see new people coming in all the time, new records every month here for the network. It's crazy. These are crazy times for everyone out there these days, even though we have been doing this for a while. This is coming up on our 16th year. Crazy to say out loud. But the Crypto Rundown, of course, one of the newer additions to the network. Even that said, it's been running for quite some time now as well, even though it seems like a new program to me. So if you like what you hear, and we do see a lot of new folks coming in from the crypto side and then expanding into our other options and derivatives related content. If you like what you hear, keep rating and reviewing on your platform of choice. Really does help the legion of new folks who are discovering the world of options and volatility. Also discover the content. And of course, if you want to go above and beyond the roughly 2 shows that are hitting you a day here on the network, a dozen or so shows on the full on-demand side. You want to go above and beyond, get, let's say, great pro Q&As. Got a great one coming up tomorrow with Mr. Gramza himself, Dan the Man Gramza, answering all of your futures, options, and commodity questions. And of course, options oddities at the end of every week. You want live access to this and everything else we do throughout the week. The great giveaways and a whole bunch more. theoptionsinsider.com/pro is the place to go to learn more about all that. As we kick things off with our first segment, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everyone, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Next up on the old hot seat is a newcomer to the program and indeed to the network. He is Corey Miller, the product manager over there at dYdX Exchange. Corey, welcome to the Crypto Rundown program.
Hey, yeah, thanks for having me. Excited to be here.
Corey, as we are wont to do with all of our first timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the crypto and indeed financial markets, as well as what it is you do day to day over there at dYdX.
Yeah, absolutely. So, I've been at dYdX now for a little bit over 2 years. I'm a product manager here. I've also done some things around growth strategies on the exchange and protocol as well. Prior to that was an investor mostly. So I was at a cryptocurrency investment fund for a couple of years, mostly doing investments in tokens and kind of like venture capital style deals in crypto companies. And then prior to that was more of a generalist venture capital investor as well, investing in seed stage technology companies. But yeah, in terms of what I do and what we do at dYdX, dYdX is a decentralized perpetuals exchange. And so we are the largest derivatives exchange in terms of decentralized exchanges out there today. We do roughly between 500 million and $1 billion in daily volume. We really strive to offer a product that rivals centralized exchanges in terms of what you could trade on the exchange, and then also in terms of the look and feel of the product itself. And so even though we are a decentralized exchange and you have self-custody, the look and feel of trading on dYdX is very reminiscent of trading on a centralized exchange. So we kind of view it as, really the best of both worlds when you trade on dYdX protocol.
Whenever we bring on new guests, a lot of them come from the traditional world of finance, and they had some sort of inflection point, some moment that awakened them to what was going on out there in the world of crypto. For you, it sounds like you kind of cut your teeth out there in the crypto space. So what is it about the crypto markets? What lured you to the dark side of crypto, Corey?
Yeah, I mean, it's a good question. I mean, I guess I did start in non-crypto markets in my career. So I was just doing, general seed stage technology investing. And then, back in like 2017 or so, really got interested in kind of diving deeper into crypto. And so as a venture capitalist, I was really meeting a lot of entrepreneurs out there who were working on very interesting ideas at the time in crypto, and kind of said to myself, this does have the potential to kind of be like a paradigm movement, zooming out and looking over the next 10 years or so. So from there, I then jumped into investing in crypto full time at a separate investment fund. And then while I was there, kind of went deeper down the crypto rabbit hole and got a really good overview, I would say, of a lot of different like sub industries within crypto. So, you have DeFi, you have, NFTs, you have data infrastructure, you have all these various things that kind of fall under the crypto umbrella. But for me personally, I was more interested in DeFi specifically. So back in 2020, I kind of said to myself that I felt that DeFi had really was really the only thing in crypto that had found any product market fit at the time. And so I was really interested in kind of just spending full time on DeFi. And so that's when I joined dYdX. I would say over the years have kind of refined what I was interested in crypto specifically, and then, filtered the funnel, so to speak, to really just focus on what I thought had the greatest potential.
You went kind of backwards. A lot of people start in the startup and then they go to VC. You started in VC and went to the startup. So a little bit of a backwards route, but it's all worked out, it sounds like, in the end. Well, you mentioned what you guys offer over there at dYdX. Let's get into that a little bit, because perpetuals are kind of fascinating, somewhat perplexing, I know, for a lot of our audience. So let's get into that. Which perpetual pairs can I trade over there at dYdX? And why did you guys decide to go the perpetual route?
Yeah, great question. So, I mean, in case anyone or any of your listeners don't really know what a perpetual is, just as a very brief overview, a perpetual is a form of feature that doesn't expire. And so these contracts have really become popular in crypto. So when you look at crypto trading volumes, perpetual markets are the contracts that have the most trading volume by far in crypto, more than spot, more than dated futures. And so we launched decentralized perpetuals a couple of years ago. And what you could trade on dYdX is basically, the top 50 or so assets by market cap in crypto. And so obviously you can trade Ethereum and Bitcoin, but you have access to a long tail of assets as well. And these assets, even though we are a decentralized exchange built on top of Ethereum, given that these are derivatives, these assets don't have to be native to Ethereum, which is an interesting point here. So you could trade a variety of assets that are not actually on Ethereum. So for instance, Solana or Avalanche or Cosmos, things like that. And so, yeah, we have roughly 50 markets, let's say. And when it comes to liquidity is really strong as well. It's definitely comparable to what you would find on a centralized exchange. And similarly with fees too. So fees are very similar to like centralized exchange fees. And again, even though we are a decentralized exchange, you don't have to pay like gas fees when you trade on dYdX either, which I would say is, another interesting aspect of the protocol.
Perpetuals are, to me, just a very fascinating aspect of the crypto space. And I say crypto because they really do seem to have found a home in crypto. You don't really see perpetuals to this extent really in any other markets out there. In fact, we had a guest recently I was talking, not on this show, but on another. They will remain nameless, but a very experienced hand in the world of all things futures and options. And so they understand commodities and futures and options. They've been trading them, analyzing, talking about them for decades. Conversation turned to perpetuals, and they had no idea what I was even talking about. And that was fascinating to me. It just shows perpetuals have just created and carved out this niche unto itself in the crypto space. What is it about crypto and perpetuals, Corey, that seems to go hand in hand? Why do these products resonate in this space and really to this degree nowhere else?
Yeah, it's a really interesting question. I mean, I guess my take on it is they were kind of popularized in crypto. So from a academic perspective, perpetuals were something that people had talked about for a long time. But to my knowledge, in traditional finance, they were never really launched or at least traded in a big way until a crypto company called BitMEX made them popular. And so, yeah, I guess maybe perpetuals for crypto is kind of like the first thing that was really tried in a big way. And, immediately, traders in crypto kind of became interested in them and it found product market fit, I would say, very quickly. And yeah, so, I was saying, crypto native people are familiar with trading perpetuals, whereas, if you're coming from a more traditional financial job, so to speak, you might not have traded them before. So there is a bit, maybe a small learning curve in like understanding what they are and how they work. And, perhaps some people may be skeptical of them coming from a traditional financial lens because they have not become, super popular in like traditional, exchanges. But, I do think they are an interesting product, and I do think they will, become more popular over time, not just in crypto, but perhaps in traditional exchanges as well. Whether that takes the form of like you trading perpetuals on like a TradFi exchange, or perhaps it takes the form of people trading perpetuals in other markets on crypto exchanges. So, the cool thing about perpetuals is, again, like they don't have to be native to whatever like chain or whatever product you're building. So if you're a crypto exchange, theoretically you could list a perpetual for anything as long as you have basically a price feed to, set the price to. And, with a price feed, you could kind of set, you can kind of derive these funding rates and keep the markets orderly. So again, like this basically scales to anything that has a price attached to it. So I think that's pretty exciting when thinking about the long-term, potential of perpetuals.
Well, you mentioned orderly markets, and you mentioned the fact that you guys are not a traditional exchange, you're a DeFi exchange. And there's a couple of challenges that come in the DeFi space. And one of them is, as you mentioned, kind of the orderly nature of the markets, the liquidity. What kind of liquidity and depth do we see out there? That's always a concern in the DeFi space. So let's get into that then a little bit. What kind of markets are we seeing over there at your exchange right now?
Yeah, it's a really good question. I would say we've taken a really strong approach to this. So whenever we launch new markets in the past and whenever we launch them in the future, we work very closely with a variety of market makers in the space to ensure there is very deep liquidity on the order book. And so, one of the things about dYdX is the way we've structured it is almost, at least in this current version, more of a hybrid exchange. So there are aspects of the exchange that are fully decentralized, that being kind of like the centralized custody and settlement. But the order book and matching engine are centralized, at least for now. In the next version of the protocol, which we're building, those will also be decentralized. But for now, they are centralized. And what does that mean? That means that we could offer kind of like these centralized APIs that a lot of market makers and programmatic traders are very familiar with building upon and trading with. And so, again, I mentioned before, like the look and feel of trading on dYdX sometimes feels very much like a centralized exchange. And I would say the APIs on our exchange are kind of follow a similar suit. So we work very closely with a variety of market makers out there. These are the types of firms that are already trading on centralized exchanges, call it Binance, FTX, Coinbase, whatever it may be. And, they are also market making on dYdX. And so, what does that lead to? We actually have very comparable liquidity to what you might find on Binance, FTX, Coinbase, etc. And so another interesting thing that we have at our disposal is the dYdX token. And so we have a variety of programs where people can get paid or receive dYdX to perform various things. One of these programs is around providing liquidity on the markets that we have. And so we have a formula that basically determines and ranks people based off of the depth and the spreads and the uptime that they have across all of the markets that we have on the exchange. And for that, they get paid dYdX, every month. And these, are another incentive for people to, continuously add and keep liquidity on the order books as well. So all of those things combined kind of lead us to a product that really does have very strong, depth and overall liquidity.
Of course, whenever I bring up DeFi with some folks, maybe from the traditional world of finance, they usually push back on a couple of things. One of them is, of course, liquidity. The other is, of course, the counterparty risk. That seems to be a big stumbling block for a lot of people who are intrigued otherwise by the concepts of the products or what they're seeing going on from a volatility or trading perspective. But the counterparty risk is something that holds them back. So, Corey, I'm sure you've encountered this a million times over there. What do you say to people who look at your exchange and say, oh, DeFi, there's too much counterparty risk for me? How do you counter that? Pun intended.
Yeah, no. So I would say like DeFi is the best really when it comes to counterparty risk. I mean, there are different types of counterparty risk. For instance, when you trade on a centralized exchange, the counterparty risk could be that the centralized exchange, steals your money, right? Or they get hacked, or they just freeze your account for whatever reason. All of those things are solved when you trade in DeFi. So as I mentioned before, dYdX does not take custody over any funds whatsoever. And so if you deposit on to dYdX, your counterparty is a smart contract. It is no longer a person that could basically run away with your money. And so that's a really strong security advantage to using DeFi overall. Of course, smart contracts can get hacked. That is certainly a risk when you do interact with DeFi, but that is a different type of counterparty risk. And I would say, one of the interesting things about DeFi is basically the longer a contract exists, you could kind of think about that as like a bounty for if the contract is safe or not. And so dYdX smart contracts for the current version of the protocol, they've been around for almost 2 years now. And they've been, these smart contracts have had quite a lot of money in them at any given time. And so no one has hacked into this smart contract quite yet. And we certainly don't expect anyone to. But even if you were, particularly worried about that part of the counterparty risk, there are insurance options for smart contracts, which I would point out as well. So for anyone particularly worried about that, you could go to basically insurance platforms such as Nexus Mutual, purchase some insurance on the dYdX smart contracts, And then if there was some sort of hack or anything like that, you would put in the claim and you would get your money back. So there are ways around that type of counterparty risk, but obviously if that type of, you can't do the same thing on a centralized exchange, right? You can't be like, oh, I want to buy insurance just in case so-and-so centralized exchange runs off with all of my money or something like that. So I would say that's kind of like the main difference.
Of course, you guys are always iterating, always developing over there at dYdX. And the latest version of your protocol, version 4, going to come out hopefully by the end of this year. So what can people look forward to with version 4 here, Corey?
Yeah, really, really great question. So this is, where most of the resources in the company right now are really working on. And what V4 really is dYdX that is fully decentralized. So as I mentioned before, we kind of operate this like hybrid model right now where we do operate the central limit order book and the matching engine. And for us, like the goal really is to not operate anything, but still retain a product that is competitive with centralized exchange or any other decentralized exchanges that are being built. And so the next version of the protocol will be 100% decentralized. The dYdX core team won't be operating any aspect of it whatsoever. And so, we are building our own blockchain utilizing the Cosmos SDK. We are currently in the midst of building that out right now. We will have a testnet out for this, either by the end of this year or early next year. And then it will be available for basically everyone to trade sometime in Q2 next year. And so that is kind of like the feature that we are building towards, something that is, fully controlled by, the token holders, and, really just like achieves this vision of being 100% decentralized.
Well, Corey, we have to keep on rolling with the show. We have other segments to get to before we roll out of here. Something else came across my radar that I have to ask you about. They are your dYdX trading leagues. It sounds like a great idea. Tell our listeners, what are we talking about? What are the dYdX trading leagues and how can they get involved?
Yeah, so dYdX trading leagues was something that we conceptualized earlier this year. Basically what it is we have 5 different leagues. You start out in a bronze league and basically work your way up every week, and you can get promoted or demoted based off of your performance each week. And not only that, like if you are one of the top traders of the week, you could win our NFTs. So we have these NFTs that we call hedgies. They're really cool. I encourage people to check them out. And you can win those every week depending on your performance. But really what it is mostly about bragging rights, I would say. And so you could basically level up or get demoted each week depending on how well you're doing, and kind of brag to whoever you want on social media, your friends, whatever it may be, and just say, hey, like I'm actually doing well here. What league are you? So on and so forth. And so it's kind of a fun product that we had built out. A lot of people are interested and a lot of people use it. If anyone is interested in that, just go to trade.dydx.exchange, start trading. You're automatically included in like the first league there. And so, super easy to get onboarded.
Well, Corey, I appreciate you taking some time to join us here on the Crypto Rundown today. We kind of mentioned V4. We talked about the leagues, but if there's any other hints or teases you want to leave our audience with, what they can expect coming down the pike from you and the team over there at dYdX, now is the time, sir. The floor is yours.
Yeah, no, I think we covered most of the major things here. Thanks again for having me on. Really excited to continue to build out, this vision that we have for dYdX, just to be like the exchange where, you could trade anything you may want, really. And so that may be the long-term vision that we're working towards here. We're kind of working on that right now. So stay tuned. In the meantime, definitely encourage people to check out the exchange at trade.dydx.exchange. Feel free to follow us on Twitter as well at dYdX.
There you go. The man hit all the spots at Twitter at dYdX. To keep on rolling, though, now it is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show we break down all the action in the world's leading digital asset. Yep, we're talking about the big dog, which is Bitcoin, which is a little bit bigger this week than it was this time last week. 19,545 coming into the start of the show. That's up about 261 handles from where it was last week. 19,283 was where it was at the start of our show last week. We saw a decent range over the course of the week, including breaking through that 19,000 level, which ginned up some action, ginned up some activity. In fact, the whole range was pretty much last Thursday. That was where we did all the living. As you know, in the equity markets, we did a lot of whipsawing last week, and the crypto markets were not immune to that last week as well. All October 13th, so lucky 13, we saw the low for the week of 18,384 and the high for the week of 19,864 out there. So close to a 1,500 point range on the week, which is pretty decent. It's not explosive for Bitcoin, but it's a decent range, especially compared to what we've been seeing of late. Of course, the trajectory from a vol perspective has been down for pretty much the last few weeks, and that has continued this week, I should say. On the show last week, the vol was 63.5 out there in Bitcoin. Remember, if you want to see these numbers for yourselves, Genesis Volatility, gvol.io is the place to go to kick the tires and light the fires out there. And you would see that the vol this week is at a 55.40. So it continues to erode after, we saw the first wave of the aggressive sell-off, and the vol really spiked. I said it on the show then. It's going to take a lot to maintain these vol levels, and so far, at least, Bitcoin has not been able to. BitVol, which is our friend Simon Ho's, his proprietary Bitcoin, effectively a Bitcoin VIX methodology out there. He had a 69 last week and a 59 this week. So his BitVol has come in 10 points. So Bitcoin vol, no matter how you're looking at it, continues to erode. Skew-wise, the skew also eroding a little bit this week as well. Most of the narrative has been how low can it go? How negative can it get recently? And it got to about a negative 4.4 on last week's show. This week, negative 2.2. So still negative, but not quite as aggressively negative as it was. Of course, if you ran those numbers, we looked at them during the lows there on last Thursday, probably would have had a very different conversation. That would have had a nice negative skew then. It has mitigated, obviously, once we have retreated off the lows. And again, Simon's Bit Skew, again, one of his proprietary methodologies there, measuring effectively the 25 delta calls and puts across a wide variety of crypto assets, including, in this case, Bitcoin. It has pretty much remained about unched as well. It was 99 last week. It's about 100 this week. Let's get out to the OI. What is open out there right now on Deribit, which is, of course, the leading derivatives venue out there. And we're seeing a little bit more paper coming in. Remember, September took a lot of paper off the board with it, and we're still trying to put back the pieces out there. 170,000 calls are open on Deribit right now. It's up about 16,000 from this time last week. The puts, 86,000, up about 8,000 from this time last week. In terms of OI, what are the top positions? What are the size positions open in Bitcoin options right now? Let's find out. Number 5, the 40,000 strike. That has 11,000 contracts open. It's up a whopping 100 from this time last week. So not a huge change there. Number 4, we have the 22,000 strike. That's got 12,500 contracts open. That's a newcomer to our top 5. So it'll be interesting to see where that goes. Number 3, the 25,000 strike. So we're climbing a bit here. 12,800 contracts open there. That's up about 600 from this time last week. Number 2 and number 1, we have a tie for the top spot here. Both the 19,000 and 20,000 strike. Both of them have 16,500 contracts open. And they're both up quite a bit. The 20,000 strike is up 3,300 contracts this week. And the 19,000 strike is up 4,700 contracts. So a lot of paper pouring into the 19 and 20,000 strike this week. Enough for them to come at loggerheads with a pretty much exact tie this week, which we don't see that too often. In terms of action, I mentioned last Thursday, the 13th, was kind of the whipsaw-y day. And that's reflected in the numbers. We saw one of the most active contract days we've seen in quite some time out there in Bitcoin options on Deribit. In fact, I'm scrolling back right now. We haven't seen, to my recollection, we haven't seen a more active day in terms of total contracts changing hands this year. The closest we have is that big sell-off that happened back in June. Remember, June 13th, we hit 54,400 contracts. Well, last Thursday, all that whipsaw, that historic whipsaw, that generated 63,000 contracts changing hands over there in Deribit Bitcoin. So that's nothing to sneeze at, listeners. That's almost 2x what we saw the week before. So a little bit of whipsaw action. It's good for some numbers out there in terms of Deribit. Let's see if it's also good for some numbers over there on CME. And the answer is kind of yes, kind of no, I guess. Depends how you're looking at it. Glass half full, glass half empty type of viewpoints. We saw decent numbers last week on the big CME options. They hit pretty much 1,000. That's a good bellwether for them. If they hit 1,000, it's a decently active week. Remember, that's a 5x contract. Most people can't touch that thing, which is why it really doesn't do a lot of paper. But this week so far, we saw already 385 contracts. That means this week. That means today. So there's a lot of paper lighting it up already today. Remember, if you want to see this paper for yourself, you can head on out to cmegroup.com/TWIFO. That gives you the free TWIFO reports. And then click on the cryptocurrencies section, and you can see what's going up. Looks like a 19,000, 21,000 vertical went up today, a whopping 25 times. So that accounts for 50 of the 385 contracts that we've seen out there today. So that's one of the leading trades. Also, the 17,000 puts in December have traded 75 times this week. So that's also interesting. And 60 of the 20,000 puts. So I think we might have a bit of a iron butterfly. That's interesting. The 20,000 calls have traded 60 times today in December, and the puts, and then 75 each of the 24,000 calls and the 17,000 puts. So doing it on a bit of a ratio, 60 by 75 in DECE. Either way, it looks like an iron fly perhaps going up here in the big Bitcoin options, which is interesting. Fun to see some of that paper going up out there. The micro contracts, the ones that are more bite-sized for a lot of you folks out there, doing decent paper last week as well. 1,600 going up last week. 300 so far today on the micro. So obviously today is a fairly active day out there as well. In terms of other Bitcoin products, before we roll out of the big dog, which is Bitcoin into the altcoin universe, you've asked, we've listened. We got Bitto on the show now as well, hanging out right around a 12 when we kicked off the show. It was 12.02, which puts it pretty much unched on the week. The vol in Bitto following the trajectory that's going on in the rest of the Bitcoin product, which is down. Bitto vol at about a 59 when we kicked off the show, puts it down 11 points from where it was this time last week. Let's do a quick top 5 out here as well in terms of what's open, what are the size positions in Bitto. By the way, if you do a top 10, look at the top 10. It is 7-3 puts over calls. So it's still all puts all the time in the Bitto top 10 at least. In the top 5, let's see. Number 5 position, we have the October 10 puts, 14,000 of those, followed by number 4, 17, almost 18,000 of the DECE 12 calls. Number 3, 28,000 of the DECE 10 puts. These are expiring on the 30th. So these are end of year DECE 10 puts. And then 29,000 for the regular monthly DECE 15 calls. And the number 1 size position in Bitto right now, about 46,000 of the DECE 10 puts. Remember, I had that 12, 11 half, 1x2 put spread, buying 1, selling 2 last week. It worked out fairly well. We dipped down through that 11 half strike for a little bit, which is not what you want with that spread. You want it to hang out right at 11 half, but that's why you buy it as opposed to just selling the puts, because then you can afford to break through that strike and have a little bit of wiggle room, a little bit of cushion. That's exactly why I did it. I wasn't comfortable in Bitto holding that level, so I thought if it regressed a little bit, retraced a little bit, I wanted that cushion, and it worked out. That trade worked out pretty well. I didn't have a chance to get any off today, but I was looking at those levels. I remember the skew, now we said, has come in a little bit. So the put spreads, 1x2s and others, not quite as attractive, but they're still there. You still can do the 1x2 put spreads for credits if you are diligent, and fairly decent credits. So might be something I'll explore again a little bit later this week. We'll see how Bitto holds up with all this crazy action as we continue rolling right on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show we break down all the action outside of the big dog, which is Bitcoin, except for right now, when we talk about the top 10 from a market cap perspective. And once again, clinging vice-like grip to number 10 is Doge, hanging out there at a little bit shy of 8 billion, about 7.9 billion worth of market cap. Number 9, we got our old friend Solana hanging out at about exactly 11 billion worth of market cap. Number 8, it's Cardano, 12.75 billion. Number 7, we've got Binance USD, 21.6 billion. Number 6, our old friend XRP, 23.6 billion. Will they, won't they? Who knows? Number 5, BNB hanging out 44.3 billion. Number 4, USD coin 44.9 billion. Number 3, it's Tether 68.4 billion. Number 2, it's ETH 161 billion. And number 1, the big dog, Bitcoin 374 billion worth of OI. In terms of action, ETH has kind of been hanging out pretty close to that 1300 strike for the better part of the last few weeks. And that pretty much happened this week as well, even though we did break below it for a wee bit. Coming into the start of the show, we had a 1323. The end of our last show, we had about a 1308. So it puts us up nearly 15 handles from where we were this time last week. Of course, in between, we had a little bit of a range. We saw the low come in again on that pretty wild Thursday. The low was 1217 and the high out there 1339 for ETH. And in terms of vol, even though we did have a little bit of swing, the vol, just like Bitcoin, continuing to erode down about 10 points. It was 76.6 on the show last week, 66 this week. So again, ETH vol can be over triple digits fairly easily, back down to a 66 right now. In terms of skew, again, similar trajectory to Bitcoin, -6 last week, -2.2 this week. Let's get out to the OI, see what's open out there on Deribit. Again, it's a call palooza, all calls all the time. When it comes to ETH, it's roughly 4-1, and that's pretty much hanging out at that same ratio again this week. 3.5 million calls open on Deribit. That's up 200,000 from this time last week, and the puts, 820,000 of those open. That's up about 62,000. So you're still hanging out and north of a 4-1 ratio out there again. Folks liking themselves some calls out there in ETH. Let's see what the size positions are. Let's see if we can suss out what was going on out there this week. Number 5 is the 1800 strike. So that's got 157,000 contracts open. That's up about 20,000 contracts from this time last week. Number 4, we have the 2,500 strike. That's got 209,000 contracts open. That's down 1,000. So not a huge evolution there. Number 3, we have the 3,500 strike. 285,000 contracts open there. It's down about 3,000. Number 2, we have the 4,000 strike. That's at 322,000 contracts open. That is unched on the week, which is interesting. That means the number 1 spot remains the 3,000 strike with 430,000 contracts open. It's up about 13,000. You folks really love that 3,000 strike. Also interesting, yet again, no really, shall I say, relevant strikes in the top 5 in ETH right now. The closest we get is the 1,800 strike, which maybe shows you some of the interest and or outlook out there in ETH. I mean, 3,000, 4,000. By comparison, if we go back up to the big dog, which is Bitcoin, we saw the 19,000 strike, 20,000 strike, 22,000, 25,000. The craziest it gets, which is pretty crazy, admittedly, is the 40,000 strike, but only one of those. If you remember this time last year, listeners, in both of them, it was all that kind of strike. It was 40,000, 60,000, and 100,000, 200,000. There was some, shall we say, optimistic paper open out there. We're seeing a little bit less of that, but obviously there is still some size out of the money call activity going up out there in ETH. They refuse to hang out at, let's say, a 1,300 strike anywhere in the top 5, even though we've been hanging out pretty much right there for the better part of the last month. In terms of action, it was again the 13th. Last Thursday was the big day. 669,000 contracts. Now, that was not a record for ETH. That record actually came last month on the 16th, which you'll know was pretty much the post-merge day out there. We saw 743,000 contracts going up that day. But again, the merge was ostensibly a once-in-a-lifetime event. So you expect some sort of numbers. So at least from a volume perspective, everyone says it was a non-event, but at least from a volume perspective, we saw a little bit of paper changing hands on the merge and a decently active week this week as well. Getting on out to the CME front, let's see what's going on out there on the CME Ether options. Remember, the Ether options, the big ones, just launched on the 12th, so a little over a month ago. Looks like they're actually starting to put up some numbers, which is interesting. You know, this is a 50 ETH contract. So once again, getting into just insane notional size. And last week we saw 102 going up, which is actually a fair amount. And so far this week, which is even more fascinating, we already have 100 contracts on the tape in ETH. So that means pretty much today we have 100 contracts already going up. Let's see what folks are slinging out here. Looks like it's a vertical. It's a 2,000, 2,500, so a 500 point wide vertical going up 50 times today on the big 50 ETH options over there on CME. So like that vertical, 2,000, 2,500. That's pretty wide, but then again, compared to the other strikes that are dominating the top 10, it seems comparatively reasonable. Let's get out to the micro ETH, see what's going on out there this week. And a decently active day. It's no big ETH options, no 100 lots going up out there today, or 100 lot spreads. There's 50 contracts have gone up so far today, though. So that's a little bit interesting. Looks like the 1,400 calls are leading the dance on the micro options this week. In terms of last week, what was lighting it up out there last week? We saw 3,091 contracts going up in the micro contract, which again, this is a bit of a head scratching product. It does some paper, then none, and then a bunch of paper, then none. It's like the most active strike last week, and the options were the expiring on November 4th, 16 half calls, doing 882 contracts. All that, again, in one day. Just put it up in one day, all opening, and that's it. No other spreads around it or anything else like that. It's just very staccato product. It prints size, and it does nothing for days, and it prints size again. So it's still interesting to watch. We're still waiting for that to develop into a little bit healthier ecosystem. But for now, that's what we got out there at CME. No Solana really at CME yet, but seeing some action out there nonetheless. Let's get out to Solana. Coming into the start of the show was a 30.81. Last show was a 32.43, so it's down $1.62. You know, if you've been watching Solana for a while, that it stubbornly resisted breaking through the 30 handle, but it could no longer resist last week during the height of the whipsaw madness out there. We finally saw it dip just a wee bit below 30. It's like we got to about a 28 half or so out there before rebounding. So it can dip below 30. It just takes a lot of pressure to do it. In terms of vol, not a huge evolution out there. It was 72.3 last week, 71 this week. So coming in, but not a ton. In terms of skew, similar evolution to Bitcoin and ETH. Less negative is the theme. It was -5 last week, -3.15. This week, even though from an OI perspective, we do continue to gain out there. Again, it's very much a flipping of the script from an OI perspective compared to ETH and Bitcoin, which are all calls all the time. Solana, naught but puts. 510,000 puts open right now, up 34,000 from this time last week. And the calls, 243,000. That's up 56,000 from this time last week. In terms of the top 5 positions, well, let's see what's open out there. Unlike the other two, the top 5 fluctuates very rapidly out here in Solana. Number 5, we have the 20 strike with 56,000 contracts open. That's up 5,000 from this time last week. Remember, I said we're hanging out at about a little bit shy of 31 right now in Solana, listeners. Number 4 is the 31 strike with 61,000 contracts. That's a newcomer to the top 5. So again, we're seeing, dare I say it, more relevant strikes populating the top 5 here in Solana. Number 3 is the 30 strike. Again, that strike we've managed to bounce off of repeatedly until last week. 30 strike has 70,000 contracts open. It's up 19,000 from this time last week. Number 2 is the 26 strike, has 98,000 contracts open. That is unched from last week. And number 1, the size position out there in Solana options right now, the 32 strike has 116,000 contracts open. It's actually down 4,000 from this time last week. And in terms of action, unlike the other two, which both saw their peaks of activity on Thursday, the 13th, this peak for Solana came last Wednesday, the 12th, with 216,000 contracts. And that is not the most active day we've seen since we started tracking Solana last month. The most active day we've seen so far was September 30th with 237,000 contracts. So it was a decently active day, but it wasn't a record, at least for us so far in our short history here on the show. Let's run through some others here before we get to some of our questions of the week here. XRP hanging out at a 47.3 this week. That's down from the 52.5 last week. It's a little over a nickel on the week for XRP. Good old Dogecoin is a 5.9 today, 6 cents last week, so down pretty much a fraction of a cent yet again. Litecoin 53.40 on the show last week, 51.70 this week, so down almost 1 3/4 points on the week. Cardano 41.5 cents last week, 37 cents this week, so down 4.4 cents on the week. Polkadot 6.35 last week, 6.22 this week, so down about 13 cents. And our old friend Shiba, brace yourself, it was 0.000011 last week, and it is this week 0.000010 this week. So alas, no Shiba Lambos for the chat this week.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the crypto questions. This week, we actually want to pay off our question of the week from last week because it pertains directly to this marketplace. We asked you folks last week, if you had to buy a 10% out of the money call on one of these four underlyings that expires at the end of the year. So effectively, which of these four underlyings do you think has the best chance of rallying through the end of the year? Which one would you choose? We gave you four options: VIX, Bitcoin, crude oil, or the S&P 500. And this sounds familiar. It's because we asked this question to you folks at the beginning of the year. That's our first question of the week to kick off 2022, the mad, insane year that has been 2022 so far. And when we asked you this back in the first week of January, when the S&P was at 4,600, I might add, and all the other assets, well, VIX was lower, Bitcoin was obviously higher, and WTI was lower. When we asked you then, 34% of you chose the S&P 500. So you thought a 10% rally from 4,600 was in the cards. Obviously, we have not seen that. So we thought it was a good time to revisit this question. Same for asset classes and see what you folks chose. And once again, you folks chose the S&P 500 with exactly 50% of you now. So we were at about 3,600 or so when we posted this. So you're talking a 360-point rally in the S&P by the end of the year. Hey, we've seen it moves 100 points a day now. So we could see that in a few days. But intriguing that was your choice. Right behind it, 32.4% came crude oil. And then we had a tie for third place, which was interesting, between VIX, so the volatility of the equity market, and Bitcoin itself, both of them at 8.8%. I thought it might be a little bit more love for Bitcoin just from a price action perspective. It only needs about 1,900 points. I mean, we've seen Bitcoin be able to do that pretty easily in the past. Yet Bitcoin bringing up the rear there in our poll, which is fascinating. By the way, if you want to play along with this week's question of the week, not quite as crypto related, but more of a broad macro conversation, which again impacts crypto traders as well, which is quite simply recession. You know, the R word, everyone's afraid to say it these days. It's typically defined as 2 quarters of negative GDP growth. Everyone's really spooked about it, and they don't really seem like they want to talk about it much. So we thought we'd put the question to you folks right now. Is our economy in a recession? Heck yes, heck no, or we need a new definition of recession. Get out there, listeners, and make your voice heard right now. Right now, as we're coming into the end of the show, this has only been live for a couple hours so far, but the answer, heck yes, is running away with it 90%, and we need a new definition, 10%. No love so far for heck no. So there's, according to this, none of you out there think we are not in a recession. So intriguing stuff. Make your voice heard at Options is the place to go. All right, everybody, that music means we've come to the end here of another fascinating journey through the world of crypto. I want to thank our guest, Corey Miller from dYdX Exchange, for joining us in the hot seat this week. Give us a glimpse into the fascinating, ever-evolving world of perpetuals on the crypto side. That they love their perpetuals there. It really is a market unto itself. Have you traded a perpetual? Are you intrigued by them? Well, maybe dYdX is your place to go. Of course, you can give them a follow on the old Twitters while you're at it over there. Just pretty simple, at dYdX. Easy place to find them. And of course, check out our friends over there at GVol, Genesis Volatility. Just gvol.io is the place to go to kick the tires and light the fires. They're literally adding new stuff just about every week, it seems like, over there. So I'm always finding new fun things to play around with. gvol.io is the place to go. We got to get on out of here. Don't worry, Crypto Rundown will be back to its usual time for all you pro folks next week. Just had to move some things around to make it work for the guests who are beaming in from far and wide for this show in particular. Tomorrow, speaking of guests, we got none other than Dan the Man Gramza joining us to answer all of your questions. You got questions about whatever it might be. It could be ags, could be metals, could be rates, could be equities, whatever trades over there on the futures and futures options side. Chances are he has some thoughts and some expert analysis on it. So get your questions in now. You don't really get a lot for crypto with him, but it might be an interesting area to explore with him. So if you have a crypto question, you're on the pro side, you want to get it in, you know how to use that members hotline or use the live chat or just submit it ahead of time. We'll make sure it gets to Dan. If you're not a pro member, you know where to go. TheOptionsInsider.com/pro is the place to go to learn more, get access to those great pro Q&As, unusual activity, and a whole bunch more. Then, of course, all that great content throughout the week until we're back here again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.